This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. You know the drill, markets move fast, and if you're not ahead, you're under. It is Monday morning, June 8th, 2026, and as we kick off a massive week for global central banks, the physical reality of the Middle East is crushing the paper market's hopes for a dovish pivot. Let's get you caught up for the opening bell. First up, the 60-second global macro flash. Brent crude remains highly elevated, hovering near the $97.50 range. However, the U.S. Energy Information Administration expects global oil inventories to plunge by an average of 8.5 million barrels per day in the second quarter of 2026, keeping Brent prices targeted around $106 per barrel across May and June. Consider the Hormuz choke point. Roughly 20 to 21 million barrels per day transits the strait. With blockade risks surging, geopolitical events are rapidly overriding baseline demand fundamentals. Meanwhile, Eurozone inflation accelerates. Flash inflation accelerated to 3.2% in May, driven primarily by energy prices that jumped 10.9% compared to a year earlier. This keeps the ECB hiking cycle locked in. The meeting on June 11th is almost certain to result in a 25 basis point hike. Markets are holding a 92% probability, cementing expectations for an aggressive policy stance. Finally, the euro cracks support. The EUR/USD exchange rate has broken below key support, tumbling to the 1.152 range. The energy tax on the European economy is actively punishing the currency. Let us take a deep dive into how the blockade of the Strait of Hormuz is forcing the ECB to hike. Into a stagflationary environment. We are stepping into a critical week for global policy. The data proves that the physical constraints of energy supply cannot be ignored by central bankers. Look at the geopolitical oil floor. Do not mistake the recent chop for a return to normalcy. While Brent pulled back from its $118.68 monthly highs, the physical foundation is cracking. The Strait of Hormuz is essentially irreplaceable. It accounts for 20% of global consumption. Combine this blockade risk with the EIA's projected 8.5 million barrels per day inventory drain. The structural floor for crude remains incredibly firm. Any peace rallies are merely tactical dips. This brings us directly to the ECB's stagflation hike. This Thursday, all eyes are on Christine Lagarde. The central bank is trapped, with Eurozone inflation back to 3.2% and core inflation at 2.5%. A 25 basis point hike on June 11th is effectively fully priced in. The conflict in the Middle East is proving to be a longer-term inflation driver. The ECB has to tighten conditions even if growth turns negative. Stagflation is unfolding in real time. Consequently, the euro support breaks. Foreign exchange markets are reacting violently. Over the weekend, the pair cracked down to 1.152. High imported energy costs are destroying balance. Even with the ECB preparing to hike rates, capital is fleeing because rates cannot fix a broken energy supply chain. The US dollar continues to act as the ultimate wrecking ball against oil-importing economies. Here's the trade flow take. This week is about survival and positioning. The ECB's looming rate hike will place immense pressure on European cyclical stocks. Prioritize hard asset hedges, maintain your US dollar exposure, and watch the Hormuz blockade. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.